which is related to the risk that expectations become unanchored, as well as the CPI numbers last week. And, I think they looked at all of that and they said, we just have to be aggressive because the situation is not improving. It's plateaued. It's not accelerating, but the inflation rate is not coming down.
Where does the policy go from here? Obviously, you have this 75 basis point hike, but you also have, of course, the tightening of the balance sheet. If you could look through your crystal ball, how do you see the Fed proceeding from this point? And what would you do if you were in their shoes?
Well, I would interpret the 75 basis point move today as continuing to put the balance sheet policy in the background and to keep it on autopilot. They did have the option of announcing some kind of a change in the pace of running down the balance sheet. They didn't do that, and I think that's because they really don't want to change, particularly so early, that policy. So the interest rate, the policy rate is the main event. It will continue to be. I think it raises the question, do we see 75 in July or even possibly in September? That remains to be seen. I think the press conference today will give us a better indication of what the thinking of the committee is.
Dennis, what do you think is critical for the Fed, for Jay Powell to convey during that press conference? Because we heard from a number of guests leading up to this decision that the Fed's messaging at this point can be thought of as even more critical.
I think he will repeat the whatever it takes mantra that he's been using, and probably almost pound his fists rhetorically behind that point that the Fed will step up to this challenge. Even as an earlier speaker pointed out, there are multiple causes of this inflation. Some of the root causes are not easily addressable with monetary policy, but I don't think there's any question the Fed is going to step up and do everything it can to bring that inflation rate down near 2%.
And Dennis, these are unusual times in which friends who usually only ask me about Yankees and Red Sox standings are watching Fed meetings, are worried about hearing this number, first biggest rate hike since 1994, saying, I thought this economy was healthy. That number scares them. What do you say to those people that feel like we are on the edge of a recession, or maybe already in it?
Well, it's a dramatic time, obviously, yeah. and central bankers prefer to be boring and in the background, and it's just the opposite. The economy is not indicating at the moment that we're on the edge of a recession. I do think we have to define what we're talking about, whether we're talking about a technical recession of 2 quarters, half a year of negative growth, contraction, or we're just talking about a slowdown. I think the committee still believes that with appropriate policy and some good luck, they can still bring us down to a softish landing and not hurt unemployment too badly. But the front and center task is to deal with inflation, and I think that they signaled today that they're up to that task.
And obviously, you mentioned the key factors that the Fed looks at there when you talk about unemployment and, of course, inflation. But do you think at a certain point they will start keeping an eye on what they're seeing with the equity markets, even though that's not their priority?
They tend to look at the equity markets, even under circumstances we've seen in the last few weeks, as a financial stability question, not necessarily a Powell put or a Fed put kind of decision, but more one of whether what's happening in the markets is actually going to undermine the dual mandate objectives of price stability and maximum employment. So that's the lens through which they'll look at market performance. And if it is really beginning to undermine what they want to see develop in the real economy, the Main Street economy, then they may act. But otherwise, they will simply watch what's going on in the markets.
Dennis, you mentioned before the tools in order to fix this, and it doesn't only lie within the Fed. There's certainly a number of factors contributing to inflation, some of that having to do with the supply chain issues that we've seen recently, obviously record high gas prices. What else do you think, or what else needs to be done in order to bring back inflation?
Well, I use the term luck. I think a bit of luck in terms of supply chain issues is going to be very important, because the supply chain restoration or improvement seems to have been a much slower process than anyone would have predicted. So that's not easily treated by public policy. It's thousands and thousands of supply chains affecting lots and lots of products. So they need some luck on that front, that those efforts in the private sector are occurring. At the same time, I think the public policy can do something about the cost of gasoline and the cost of energy. The administration appears to be doing several things that try to address that. I'll tell you, my concern is that the Fed is taking on most of the responsibility, almost all of the responsibility for inflation, when their tools are designed just to deal with the demand side, not the supply side. And the temptation to use those tools very, very aggressively could put us in a more recessionary environment than might otherwise have naturally happened. I think that's a legitimate concern.
Dennis, is there something you'd like to see from the administration or from Congress that could bring down prices?
I think the key price issues for most households in America are gasoline prices and food prices. I am sure there are some regulatory and other decisions, including foreign policy decisions, that can be made that might have some effect in the relative near term on those two categories of purchases. And they should be looking at every one of their options. I don't have any specific recommendation, but clearly they have to look at everything they could do and then decide what they're prepared to do.
I mean, just a few months to the midterms, we know they're keeping a close watch on that. We do thank you for joining us today. Dennis Lockhart there, former president of the Federal Reserve Bank of Atlanta. Thank you. Well, crypto lender Babel Finance is halting withdrawals just days after Celsius did the same and sparked that crypto sell-off. More on crypto's wild week. We're joined by Matt Hogan, Bitwise's CIO. So, Matt, obviously a tough week here, but even though these are just the latest controversies, it didn't start here. How did we get to this point?
Oh, that's a great question. Thanks for having me on. There is a macro trade from risk on to risk off assets that drove crypto prices down starting about November of last year. Crypto prices retraced down about 50%. And after that pullback, what we're seeing is sort of exposing the weaker corners of crypto, right? We saw Luna stablecoin fail. We saw Celsius run into issues. You mentioned Babel Finance. Crypto is going through a classic deleveraging cycle, and it has to continue that cycle until it hits the bottom. So again, a macro reset drove down prices, exposed some weaknesses, and now we're in the process of washing those weak corners out of the crypto market. We'll get to a bottom and rebuild from there, but we may not be at that bottom yet.
Which implies another rough week ahead. Bitcoin down 22% the last 5 days. We talked a lot about the last 5 days. Where do you think we're going in the next week or even two?
Yeah, I think the next few weeks could see continued volatility. I wouldn't be surprised to see a short-term bounce if we can get through this weekend unscathed. Trading volumes thin out a little over the weekend, and so you can get some extra volatility. There is a lot of institutional capital that wants to move into the market. We speak to financial advisors and family offices all the time. They're thinking about where the right point is to buy this dip. But my big picture view is there's still a lot of macro uncertainty in the market. There is still some questions about how much more deleveraging there is to go in crypto. So there's volatility, for the next few weeks, next few months. I do think the long-term aspect's still bright. The fundamentals of crypto underneath these macro news items is still very strong, but there is continued volatility on the horizon, at least for the next few weeks and probably for the next couple of months.
Yeah, Matt, there's been lots of talk out there about what could potentially be the next shoe to drop. Is there anything in particular that you're watching or investors should be watching when it comes to the expected volatility that we could see in crypto?
Yeah, I'll tell you something interesting, which is at the first start of this week, everyone felt there were multiple shoes to drop. And we did see some more drop. Also not mentioned, Three Arrows, a large hedge fund, is imploding, right? Is winding down over the course of this week. Now there's a more diverse viewpoint. Many people think there is not a next shoe to drop, but others are looking at other lending platforms or other hedge funds and wondering if there is more. It is a start of a sentiment shift, but I still think there is risk. There could be additional repercussions. Deleveraging processes always go on a little bit longer than you think. They have to get to a very solid foundation before you can build. And I think there is a worry that there may still be a few more items along the lines of Celsius and Babel and Three Arrows yet to come.
Matt, as you mentioned, some of these corners of crypto now getting sort of thrashed out as we see there. But are there some aspects of the crypto industry that are doing well? A lot of focus on obviously on the individual tokens and the platforms themselves. What about the underlying technology and those sectors as well?
Yeah, I think that's really important. If you're a long-term investor, this is one of the most exciting times to enter the crypto market. You're getting to enter into, world-class market-leading protocols at prices that are down 70, 80, and 90%. When we look at what's going on in the Ethereum ecosystem, or we look at some of the decentralized finance applications like Uniswap, those are amazing market-leading technologies. They're making continued progress. They're onboarding users. Their trading volumes are significant, and their prices are down substantially. So I do think there is a buying opportunity if your window is not the next 3 weeks, but the next 3 years. You're really having a sort of rare opportunity to enter these market-leading protocols at prices that are down 80 or 90%. But you do have to have that long-term point of view if you're going to do that.
So you talk about the next 3 years, but the next 3 months are going to be interesting. And we heard Jerome Powell talk about at least another 50, if not 75-point hike in July. We're certainly going to have another hike in September. And what does that mean for the crypto space to continue to raise rates in the short term? How will it? Yeah.
It's a great question. I think the market is comfortable with those rate hikes. I would say that those rate hikes are already priced in to the crypto ecosystem. The question is, does Powell have to go further than that, right? If we start seeing the market pricing in not 75 basis points, but 100 basis points at the next meeting, that could be difficult for risk assets. If we start to talk about Fed funds rate, going into the 4s and 5s over the long term, if it's harder to quash inflation than we're currently thinking, that could be hard. I do think 75 basis points the next meeting is already priced in. Probably 75 basis points the next meeting is priced in. The question is that enough, or will there necessarily be more? And there obviously diverse views on that.
Indeed. Well, we do thank you for joining us today, Matt Hogan, there, CIO of Bitwise.